So markets have their ups and their downs, and 2021 has definitely been so far a year of up and away. Year to date, the S&P 500 is up around 20+%, which is remarkable, especially considering we came out of one of the toughest years in recent history back in 2020. In fact, this rally is setting records. We haven't seen this sort of rally year to date since 1997. So if you've been invested, kudos to you. And what's even more remarkable, guys, that since November 4th, the S&P has not seen more than a 5% correction. That's well over 200 sessions now with this monster run, and this has only happened 8 times before. So what happens next? Are we gonna crash and burn? Is this the end of the bull market? Let's talk about that. Well, first things first, if you guys follow me on Twitter, and if you don't, follow me on Twitter, you'll know that in general, I'm fairly optimistic when it comes to investments, the stock market, especially when you're looking at long-term holdings. Sure, there are companies that pop up here and there that I personally don't think deserve the valuations that the market gives them, but that's kind of what makes the market go around. There's some people that believe this company deserves such a high valuation. There's some people that believe they don't, so they short those companies. That's just how the market dynamics work. And if it wasn't for this, opinionated system where investors can be bullish or bearish or neutral, we wouldn't really have a market. So be thankful that people are against the stocks that you love because they'll short it and that could result in even more upside. Or just be thankful that people are super optimistic, which creates bubbles and you get opportunities to short, bet against the market and make money that way as well. That's the beauty of the stock market. Now here's the thing, personally, I don't directly short stocks. I've never shorted shares in a company. Yes, I've bought put options before. Yes, I've, gone short calls before, but I've never gone out there and shorted shares in a company because it's clear to me that over the long term, good companies will just keep moving higher. But anyways, what I want to do in this video is actually provide you with some pieces of information that I came across, some historical data that I think will actually provide a ton of value for you if you're invested in the market today. So here's some data from FactSet showing us what year-to-date returns are like following a 15% performance year-to-date in August, which is what we have this year. We can clearly see that there's a common theme. Except for 1954, every single other time the S&P was above 15% in August, the final 4 months of the year saw slower returns. And this should be expected. After being up 20+%, the chances of seeing another 20% in the last few months of the year is very slim. It's very tough for companies to justify that sort of valuation, even if the companies are already pushing bubble-like behavior. What is surprising though was that in almost all these cases, we did see positive returns for the remainder of the year. What this tells me is that when there is momentum pushing the market higher, especially when it's a sustained run over a long period of time, months on end, don't bet against the market. It's gonna keep moving higher in the short term. It's gonna keep kind of chugging along here as momentum just keeps going until there is some big catalyst that turns things around. And as of right now, there's a few things going out there, the Fed possibly tapering, rate hikes, all this stuff. The market already knows it. It's already kind of incorporated it in some aspect into the current prices. But unless we get some sort of surprise where the Fed raises interest rates tomorrow or just something super unexpected that the market hasn't fully priced in, that's when we're gonna see possibly a sharper correction happen fairly quickly. Personally, in this sort of market, I would not go heavy with shorting any individual stock or the broader market in general, unless it's sort of like a hedge for a position of yours. That makes sense in most situations. But if you're just gonna go out there and deploy all your cash to short the market, good luck, it's risky, you're betting against massive momentum. Now another stat here shows us how many 5% pullbacks we've seen in the S&P over the years and how on average we see 3 of these per year, but 2021 so far is bucking that trend. Here we can see the chart for the SPX on the monthly time frame, and this looks like a parabolic move upwards. And we're super stretched from the 50 moving average, guys, which generally is a strong, healthy level of support to test every so often. But it seems like this market does not care. It keeps moving higher month after month, making new all-time highs, stretching even further, and that's just the environment that we're in. Now, a lot of people are giving the Fed credit here for this monster rally in 2021. And I think there's no doubt at this point that after the Fed stepped in, it set up another massive bull run back in March, April 2020. Since that time period, we've pretty much been moving straight up with the Fed's support. And with their most recent meeting over at Jackson Hole over Zoom, the Fed did say that they do plan to taper, but not so fast. They were planning to do it a bit sooner, but it looks like because of all the new stuff happening in the world, they're going to hold off for now. Tapering isn't going to happen in the next few weeks, something like that. And that's what the market has sort of accepted and priced in at this point. They also mentioned that they won't be raising interest rates, like I mentioned, until at least 2022, which again, something the market likes. So what does all this mean? All it means really is that for now, the party just keeps going. We're going to keep having these small pullbacks here and there. Those dips are going to be bought up. Investors are just going to keep piling cash in because let's be real. Where are you going to put your cash if it's not in the market? You're not going to put in other sort of assets because it doesn't provide you as much flexibility or yield on your money. So that's why investors are just plowing money into the markets here as much as they can and just enjoying this run while it keeps going. But here's what I think. I think for the rest of 2020, we can probably keep this party going unless the Fed does sort of pull forward some of their things like tapering or interest rate hikes. In that sense, the market will probably get spooked and we'll see a correction at that point. Doesn't necessarily mean we're going to see a massive 20-30% crash like in 2020. I don't think that's going to happen because a lot of times in the past when the Fed starts raising interest rates, yeah, the market gets spooked, but then it starts pulling higher once again after that initial scare is out of the way. But what I do think we're going to see as we approach the end of 2021 into 2022, they're going to see volatility pick up once again. I think as we finally get in 2022 and the rates start getting hiked, we're going to see some sort of pullbacks, sharper pullbacks than we've seen so far. And I think that these high valuations for companies that are debt-ridden, that don't make any money, don't have positive free cash flow, none of that stuff, I think finally those stocks will start pulling back. The high quality companies will probably, continue sideways / moving higher a little bit. And we could get an overall market where in 2022, the S&P returns negative numbers for us. And that's normal, guys, especially after many years of positive returns. Honestly, if we see a 5-10% correction before the end of 2021, it'll probably be one of the best things that could happen here for this market. Because think about it this way, right? When the market corrects, it kind of refuels and reignites and sets itself up again for another big run higher. It's hard for the market to just make a straight run up because when we do correct, we correct massively and that spooks a lot of people. Money leaves the market never to return. But when we see these small pullbacks, 5-10%, yeah, some people get spooked, but then the big money that's been piling up, waiting for a dip, they throw that money in, the market moves higher again, pulls back, again, the same thing happens. And that's kind of what we've seen throughout 2021 to a smaller extent because the corrections have been kind of baby corrections, if I'm being honest. But anyways, in a nutshell, that's kind of what I think. I think if we don't see a correction by, January 2022, prepare for some volatility next year, prepare for a sharp correction next year, and possibly a year like we saw in 2018. As of right now, personally, what I'm doing is I'm continuing to average into my, high conviction companies. I've been buying stocks like Alibaba, I've been buying stocks like Coinbase, I've been buying stocks that, are showing me some value. I think that they could be much bigger companies in the future. They're not pushing all-time highs, but they have the potential to move, 50, 100% in the next few years. Those are the companies I'm focusing on, and trust me, there aren't too many of those out there because most quality companies are pretty much at their all-time highs today. But what I am also doing simultaneously is I'm building a large cash reserve. As of today, my cash balance sits somewhere between 25 to 30%. That's a lot more than I typically like to hold, but in this environment, I'm just finding it hard to deploy large sums of cash into high conviction names. My top favorite companies like Tesla, like Nvidia, like Facebook, these are all companies that are doing extremely well. And I think the valuations for some of them like Nvidia and Tesla, yeah, they're a bit stretched. So I don't really want to buy more at today's prices. But if we do see big pullbacks in those will probably be first priority for my capital. So guys, we don't really know when a correction will come. All we know is that a correction will come at some point. And when it does, you need to be prepared to step in, against the grain, against the fear in the media, against what probably most YouTubers will be saying of, oh my gosh, the market's crashed. You gotta ignore that noise. You gotta go in, you gotta buy the dip, and you gotta stick with your high conviction names. That's just what I'm doing. That's personally, I think, the best way to go about in this market. If you have a long-term horizon, say 5, 10, 20 years, it doesn't matter if we correct 5, 10, 20% because those little, blips in the market over a long period of time are just buying opportunities. Anyways, just felt like I need to make a video on this because I'm starting to see a lot of people get a little bit uneasy here with the tiny bit of pullback that we've seen recently. I'm welcoming it. I hope we see our first 5% correction here. And if you are someone that's afraid of what's happened in the last couple of weeks, consider deleveraging a little bit because you may be a bit too exposed to some of these, more riskier plays, which could come back to hurt you if the market sees a prolonged down period. Anyways, guys, hope you enjoyed this video. Don't forget to invest positively. Smash the like button if you enjoyed it. But anyways, I'll see you the next time. Peace.